Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes.
A lot of people have been panicking with the market's ups and downs as of lately. Now, I'm one of the few people that are pretty calm because I've seen all of this before, and Raoul is right about one very particular thing that you guys need to pay attention to. There are going to be a select few cryptocurrencies that will perform better than the rest, and these ones are projects that provide a lot more intrinsic value and bring a lot more to the core base of the users on those blockchains. And so with that being said, if you are focusing your capital in those specific regions, you're going to have a much better chance at being extremely successful during this bull run. And so that's what we're going to be talking about today. We're going to be going through the mechanics of that with none other than Raoul. I need you guys to listen very closely, because if you do, well, you're going to learn some pretty valuable information. Hit that like button so everyone sees it. Let's get into it.
So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all f***ed? Is it going down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like, oh my God, the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote it, I think, in response to you, OV, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh shit, tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and would then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system, and I think that's sort of somewhat purposeful overall. But if we go back to 2017, and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
USM2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does, not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So, look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. This one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like it's all fine.
What Raoul Pal is discussing here and explaining is actually a pretty simple concept when you really boil it down. When the supply of dollars, the US dollar, goes up, the overall value of each dollar that's in circulation goes down a little bit because it's actually circulating around, and of course more of something makes it less scarce and inherently makes it less valuable if it doesn't have the same amount of use case. And so naturally speaking, what institutions and smart retail investors do during a period of time like this is they look for alternative stores of value. In other words, when the Fed is printing money and people know inflation is coming, the value of the dollar is going down, they're looking at ways to make sure that they're going to keep their wealth. Now, there's a few ways that investors have done this historically. Number one, of course, has been gold. That's the longest standing retainer of value. But then you also have stocks. You can invest into companies that are producing valuable services to the public, which you know people will still be using, or maybe even using more with more circulating money. And as a result of that, the stock price will go up and you'll make even more money off of that. Or you can look at what is actually quite literally designed to be a store of value in a completely alternate fiat system, which is cryptocurrency. It's now a new decentralized system that's better for everyone. And so what Raoul Pal was discussing is back in 2016, 2017, a lot of investors had this mindset. They said, okay, yeah, I don't really trust the dollar. The US is literally talking about weakening the dollar, making it less valuable. So we're going to need to put our money in something else. And yeah, I think with the way that the current centralized banking institutions and the Fed is set up, quantitative easing or printing money is actually a necessary evil, but that does not mean that we need to lose our purchasing power. We can buy real estate, we can buy stocks, bonds, cryptocurrency to ensure that we do not lose our purchasing power or our wealth. And so with all of that in mind, there's something that all of you, in my point of view at least, should be paying very close attention to right now. Which specific cryptocurrency projects are innovating and will become the best possible stores of value? And in order to answer that question, you need to see which projects have the most amount of intrinsic value, which means, do they provide a service that people are actually using and actually solve real world problems? And so if you find a project that solves real world problems, has great tokenomics, and many people are using due to the fact that its technology is incredible, whether that be institutions, whether that be retail, whether that be for AI applications, you name it, well, then you should probably be parking your money in those ones, because during the later stages of this particular cycle, just like what we saw back in 2017, those types of projects are going to do phenomenally well. Those are the ones that are going to outperform absolutely everything during the peak of the cycle, and the ones that will make you the most amount of money as the government decides to print away and weaken the US dollar. So with all of that being in mind, there's a couple more things that Raoul Pal is going to talk about, which I think you guys should listen to very closely. And then we're going to get into, well, how you guys can make sure to preserve that money, baby. Let's get back into that with Raoul Pal.
Normally decouples at this point in the cycle anyway, because it starts forward looking. Now, liquidity is actually financial conditions drive liquidity. And so crypto has been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And, you know, we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. You know, people forget that. Like, the institutions here, it's amazing. Well, it has to be if you want 100% rise, you need larger pools of capital now because it's a much bigger market. So, and over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But look, overall, the trends are all right, and we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's kind of a max fear right now. It's crazy. But that's a good setup, right? It's just a good setup for the year. The other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about Feb, March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for a larger top. So I think the business cycle's still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50.
So you heard it from the man himself, and I 100% agree. We're really early on to the cycle. It's too early to start panicking now, but that's exactly what the institutions want you to do. So if you want to play their game, get manipulated by them, and be forced to sell your cryptocurrency because you can't hold on to your own emotions, be my guest. But if you actually want to make money and you want to make the most out of all of your crypto deposits and trades and everything that you do, whether that be futures or spot trading, make sure you sign up to BTCC using my link if you're in the United States of America, because you guys are getting a 10% deposit bonus on first time deposits and up to $10,000 in bonuses just for trading. Or if you sign up to MEXC because you're somewhere else outside of the US, you can also trade and get XRP for trading. And by the way, XRP and HBAR, those are the two cryptocurrencies you want to look at right now, because those are the ones that are providing value. So sign up to BTCC or MEXC using my links down below. Ladies and gentlemen, hit that like and subscribe button if you enjoy the content, and I'll see you all very soon. Peace out.